Welcome back to Income Trading 101. Today is May the 12th, 2021. We saw a pretty decent pullback in the markets today, and just wanted to take a look at another another company that has seen some growth and has also had a bit of a pullback this year. So, taking a look at Salesforce.com, symbol CRM, which is great because they are a CRM. And we're going to start off just by trying to get a good sense of all the data that's available, at least for 10 years. We've got 10 years worth of data right here. You can see that we pulled back, but we're still, in many regards, trading near all-time highs, right? All-time highs were closer to 200, we'll call that $285 or so. Sure, we're off from that, but relative to where we've been, we're still pretty high. So let's get rid of this volume and go back to kind of a 1 year mark, and we're gonna analyze this from here using our normal process. So let's start off with the moving average. Just gonna get three of those up there. You guys know I like to use the 10, the 20, and the 60. So I always make the 10 green. It's my short term, it's my buy signal. Next up, I've got the 20, which is a little kind of medium term, and that's my red. And then this yellow line I like to keep at the 60 period mark, just so that it gives me a sense of where things have been averaging over the last 3 months. So, wow, you can see that really up until November of last year, this company had been trading well above its 60-day moving average, and then it sort of got chopped up, and in December switched over to where the 60 was on top. We've had periods where that was not the case, and right now we're seeing the 10 in the daily at least. Let me go ahead and expand this out so you can see it clearly. You've got the 60 between the 20 and the 10, so there certainly is a convergence going on. Certainly not a buy or sell signal, even though price appears to be bearish at this point. The moving average, what I'm saying, the moving average is not actually showing that in the daily. Let's take a look at the 1 hour. So the 1 hour does show all three moving averages in line, with the 60 period higher than the 20, which is higher than the 10. So when all three are in line heading lower, it appears to be a bearish signal. Let's go ahead and look at the 30-minute, and then we're going to look at the 15. So definitely a confirmed bearish bias in the 1 hour and the 30-minute. And the 15-minute shows a bit more convergence because we had a little bit of a flattening out towards the end of the day today. So the 10 is between the 20 and the 60, but on the 1 hour and the 30, you definitely had confirmed confirmed bearish signaling going on. Let's kick this back to the 1 day. We're going to take a look at the MACD, which is always my go-to as well. Now, some folks prefer using like the RSI, and there are other ways to get a sense of momentum. This is just one of the tools. And what's most important, I think, in technical analysis, I can show you all the tools that I use. What's most important is that you get familiar with them and familiar with what they do and what they show, right? So right now, we recently on April 29th had a crossover in the MACD, a bearish crossover. This crossover of the signal line and the MACD line happened above the zero line. Above the zero line is the overbought area. And hey, if you're not familiar with any of these indicators, I made a great video called how to trade stock using technical analysis. It's available on the channel. I created it as a tutorial, so definitely go. It'll give you a great tutorial of what the moving average is, what MACD indicator does, and also things like Fibonacci Retracement, which I'll get into in a little bit. But I like this crossover on, it looks like actually the crossover was on the 30th of April, and then you had a couple weeks later, both the signal line and the MACD line are about to be negative. I always like to see the MACD line confirm itself, confirm that it's a good trading indicator by seeing it go from positive to negative. That's when I truly believe it. And that's just one of those things that I've picked up over the years. You may end up seeing something different. Let's take it down to the 1 hour and see if we see anything going on. So we do have, now remember the 1 hour on the moving average front was showing bearish, but we've got this bullish momentum that kicked in on the 5th about a week ago, but it hasn't crossed over into the positive territory. And so I really hold this as being sort of a false indicator. That crossover isn't giving us any real knowledge. Same with this one here, although this one crossed and then pulled back, and now we're sort of still below the zero line, which is the oversold area. But it doesn't appear that we have a crossover buying to push stock higher. So again, the 30-minute moving average was also showing bearish. Let's look at the 15 minutes. The 15-minute was much less conclusive. And you can see how this thing really does oscillate positive and negative. So right now we've got a crossover, a bullish crossover. That when that blue line, that MACD line goes higher than the signal line, that is bullish. But again, this could end up not crossing the zero line into positive territory, and therefore it's just a kind of an irrelevant indication at this point. So the last thing I really want to take a look at with this is just I want to get a sense of where we are relative to where we've been. And for that, I'm going to do a big old Fibonacci retracement. We can go all the way back and back, right? And because this will let you know where we are in the grand scheme of things. So that is bottom to top of the last 10 years. And if you were to just stop it with that 10 years, we are clearly, let's do this. Boom. Shrink that. Well, not going to let me. There we go. Let it go a little bit. Move that over. Okay, cool. Awesome. So we clearly are closer to the... Oh, how funny. This thing is not wanting to play. So I'm going to shrink it up. I'm going to get rid of this and just make a little bit different. We'll go from, say, this point all the way there. Perfect. Just like that. All right. So right now, price is below the 23.6 retracement, but not nearly all the way to the 38.2. This is of the last 10 years. This is a significant pullback. Now, I can delete this, right? Delete it, and we're just going to look at, let's say, the post-COVID, rebound, and get a better look at where we are today based on that. So basing it on the rebound, let me increase this a little bit too. All right. Okay. All right. So there it is. We got everything there. So on this, since the rebound or since the recovery started back in mid-March 2020, this would be the recovery from COVID. We right now are sitting at, we bounced off the 50% level, right? Just barely there. And now we are below the 38.2, but not quite to 50. So what's interesting about this, two things. A, we covered this big old gap period here, which you always expect the gap to fill in. B, is the fact that where we are right now, we could easily, I mean, we're only $10 away. We're kind of smack dab between the 50 percent retracement and the 38.2% retracement. So honestly, when you're uncertain, I'd try my best to be patient and just see which way this thing is going, because I think it could easily retest that 50% and even go a bit lower than that. Here's one of the things that I can't seem to ignore. It's the fact that we're just going to do it. We'll do it as a channel because you guys know how much I love drawing these channels. So we're just going to draw that low line there and just pull this bad boy down. And look at that. Doesn't that make it visual? I mean, you can tell that over the last, we'll call it 6 months, a little longer than that, Salesforce has been on a downward trend. And so, I would not trust that it has broken out until it stays out of the trend to the upside for quite a while. Otherwise, I think it's safe to say that this will probably go even below $200 a share. So definitely keep your eyes open. The fact that everything seems to be pushing more bearish than bullish is a good indicator that things might be heading lower. So how do you make money on a bearish trade? How do you make money when the market's going down? Well, a couple of things you can do. You can buy puts, right? You can also sell puts, and that might not sound intuitive, but the kicker is if you sell an option to someone, it has to be, before you lose the maximum value, you need that option has to go essentially in the money. And so, and it has to do so before expiration. So the person buying that option from you has to be correct on both the timing of the move and the actual direction of the move. So you can make money as the markets are going lower by selling puts, because there's a good chance that those options are still going to expire worthless or out of the money when the time comes, as long as you play it right. Another way to do it, selling call spreads. I'm a big fan of selling call spreads. If you have the limit size, you can also just sell naked calls. Although naked calls are scary and should be treated with respect. Not that naked puts aren't, but at least a naked put just means you're going to be buying stock at a lower price than you currently can today. So if it's a company that you like, it makes sense to go ahead and follow through with that and be able to buy your shares, say 10% or 20% below market value or wherever you see value. So there are a number of things to do. I talk options on a podcast every week. I won't bore you with options right now, but for those of you who love options, definitely check out the weekly option podcast. And hey, for those of you who have not already, I mean, honestly, you haven't subscribed to my channel yet. I mean, I don't know what else to do. Let me know what to do. I'd love to have you be part of the family, be part of the team. Definitely subscribe to the channel, like the videos, feel free to comment on it. Always love to hear who among you actually own this stock as well. I do not own any CRM. I'm familiar with their business intimately, mostly because of friends who work there, but I'm not familiar. I don't own any shares. So that's it for tonight. Thanks again for watching. Thanks for listening. And certainly comment or hit the like button. And more importantly, and most importantly, please do subscribe to the channel. And I certainly appreciate it. All right. Hey, have a great week. Happy trading.